Okay, good morning guys. Hope everyone's well. Final session of the week, 2nd of March. We're going to be looking at the dramatic events from last night as Donald Trump finally has waded into the arena of the global trade war. He's kind of been threatening this, well, even before he was elected, of course, during his election campaign. Lots of comments on the campaign trail about how he's going to bring back American jobs and slap tariffs on the world and so on. Well, actually now he's going to do it. So this kind of ratchets up the trade war risk. So we'll be talking about that. Big sell-off into the close on the US session last night. Also big day ahead for Theresa May. So she's got a big Brexit speech that she's delivering this afternoon. So we're going to preview that and see how we expect that to play out in terms of market reaction. So let's get cracking here. And of course we need to start with Senor Donald, who, well, I guess we should have expected this. I guess the one surprise is it's taken this long, to be honest. He's been threatening it for a long time. Here's the kind of headlines you're seeing on some of the media space this morning. Trump's tariffs throw a wrench in the global trading system. So what has he done? And I'll just transition back and we'll look at the S&P and I'll just zoom in on last night. So we had a decent sell-off into the close last night. The session before then had been quite well balanced. I talked about this in the EU wrap last night. Plenty going on yesterday. You know, powerful manufacturing data from the US, the best for more than a decade. We also had some inflationary figures in there. We had a bit of dovishness from Powell, and it all kind of netted off to be neutral-ish for equities in the US, it would seem, and we were range bound. And then just after the European close, Donald dropped his bombshell. So he said he's going to put tariffs on all imports of steel and aluminium, and he's talking about placing a 25% tariff on steel imports, for example. As I said, he's been threatening this for some time. His angle is that China are responsible for suppressing metal prices globally. He believes that China have dumped a massive oversupply of steel onto the global market, and it has led to price points for steel collapsing. And what's happened is the price of steel has gone so low that it's made it pretty much economically unviable to produce this stuff in the US, given US kind of salaries, and it's put a lot of the steel industry, the Midwest steel industry in the US, out of business. And of course this means huge amounts of jobs have been lost, and of course this is the precise kind of portion of the US electorate that Trump tapped into during his campaign and promised to get their jobs back. So it's taken a while, but now it seems like he's acting. And the problem is, well, it's very hard to judge just what the ramifications of this move might have. We'll talk through some of them now. But before we do, obviously equities to the downside yesterday. This is genuine risk here from a sort of global trade war point of view. I know those are strong words, but we really have to put this into that kind of category. What Trump's done here, and it's, I guess, for the last 12 months since he's been in office, we know what Trump wants to do. He's wanted to do this for the whole time, but he's got kind of Gary Cohn on one side of his team, who's head of the sort of Economic Council, and he's very much saying, look, don't be stupid, don't raise tariffs like this. It could have repercussions in terms of retaliatory sanctions, number one. Number two, actually what it could end up doing is increasing the price of steel, which therefore then is going to have an impact on consumers right across America, and actually would end up being a negative for the very people that you're trying to make it a positive. It could lead to, you know, consumer products increasing in price as producers pass on the additional materials costs to the consumer. So that's certainly one risk. It could backfire entirely and be negative for America through price pressures. So you've got Cohn on one side of Trump, speaking into Trump's right ear, saying, don't be stupid, don't do this, it's going to backfire. And then you've got the likes of Wilbur Ross, who's his commerce secretary on the other side, who's saying, he's the kind of ultra-nationalist and saying, come on, let's do it, let's be aggressive, we'll show them kind of attitude, which obviously Trump more leans towards Ross's point of view. But for now, Cohn's been managing to offset this, but not anymore. So he announced it last night, a worldwide tariff increase, and you've seen markets react, initially anyway. We'll see how this plans. But look, this move last night wasn't small. So the S&P was just ticking up around the 2,700 handle, which had been great support all day. Okay, 2,700. And then we released to the downside, sharply down to S2, break of S2, and then into the close, pushed down, and we bottomed out at 2,658. That's a 42-point sell-off here. We've stabilized a little bit since then. Getting this in perspective first, just looking on the daily chart, given the collapse we had start of February, these moves yesterday don't seem all that big, but they actually are. So actually this puts the S&P back at levels we hadn't seen since Valentine's Day, 14th of February. So we're kind of back on the downside here. We'd started the week really positively, boosting higher, continuing to recover the early Feb losses, but it's all turned pretty quickly. You've had 3 very negative sessions in a row, all 3 sessions more than 1% to the downside, and right now we're finding some form of kind of resistance. We're trading right on the low from the 22nd of Feb at this point. Okay, so very negative for equities here, very negative for most equities, I should say. Here's a chart of some companies that this is definitely not negative for. And these are the US steel producers, steel and aluminium, I should point out. So it's not just tariffs on steel, it's tariffs on aluminium or aluminum, if you'd prefer to call it that. And these are the producers of this stuff, and these are US companies that produce this stuff, like US Steel, for example. Their share prices through the roof last night. Check out Cleveland Cliffs, share price up almost 9%. So Alcoa here, interestingly, not that impacted.
The Commissioner says EU is discussing measures such as bringing issue to WTO safeguard.
Okay, I'm going to talk about the EU in a second. Not sure who that was on the squawk. Anyway, Alcoa is the world's biggest aluminium producer. They didn't get much action on the upside off this yesterday, but pretty much all these other producers did. So obviously, a lot of US companies high. Now, what's important about this? What's the reaction internationally, first of all? Well, actually, hang on. How has Trump been able to do this? And I say being able to. He hasn't signed it off yet. He's going to sign the bill next week. So what about Congress? Don't they have a say here? Doesn't this bill have to get voted through Congress? And here's what Trump's doing. He's actually using, it's basically it's a levy on national security tariffs. Basically what he's doing is he's going to try and use a loophole in the World Trade Organization rulings, where there's a loophole where you're able to raise trading tariffs during times of war, and only during times of war. Otherwise, this kind of action in terms of raising trade tariffs would be in complete violation of World Trade Organization rules, and threatens them being thrown out. But Trump's trying to use a loophole that's reserved for war times. Now, as far as I last checked, well, there's certainly no war on US territory. I guess it's difficult. You can argue that war has changed in recent years, decades. You know, wars aren't fought on the battlefield so much anymore. They're fought in kind of cyberspace, or let's say terrorism actions. So I don't know. He's probably going to pretend that there is a global World War III going on somewhere in some form, and therefore this should enable him to trigger this loophole and go ahead and raise tariffs. Let's see. What's more important at the moment for now? What are the rest of the world saying? So I've got some quotes here. Let me just find it. This is what Jean-Claude Juncker has said. So this is the EU and their response. We strongly regret this step, which appears to represent a blatant intervention to protect US domestic industry and not to be based on any national security justification. He goes on to say the EU has been a close security ally of the US for decades. We will not sit idly while our industry is hit with unfair measures that put thousands of European jobs at risk. That's what Europe think. This morning, the EU Trade Commissioner has literally just said, they've stated that the EU is discussing measures such as bringing issue to the World Trade Organization, safeguards and possible retaliation. So that's what Europe think. What do China think? They're disappointed. If other countries follow in the steps of the US, it will harm global trade. China urges the US to abide by multilateral rules and to make contributions to the trade and economic world order. The thing about this from a steel point of view, do you know how much steel, how much of the steel that US import comes from China? And here's the thing, it's only 1%. And like when we're thinking about aluminium and stuff, check out this chart. This is actually an aluminium chart. So China, when it comes to aluminium, are 4th on the list, but check out the top of the list, and it's the same for steel. This is going to be a nightmare for Canada, because this is global tariffs. So it's not just tariffs on imports from China. This is tariffs on steel, full stop, coming into the US. Now, at the moment, Canada are the largest importers of steel and aluminium. Brazil are also a large importer of steel, not so much aluminium. Mexico are a large importer of steel as well. Let's check out what they think about this. So let me just come down and get you some other quotes here. So Canada, they said this is absolutely unacceptable and vowed to respond. It's entirely inappropriate to view any trade with Canada as a national security threat to the United States. I'd say that's a fairly strong argument the Canadians have got there. Now, it might turn out that that the US might handle this whereby, right, global tariffs, but then you can apply for exemption from that. This is how they might play it. So it might be the case that the likes of Canada or Mexico or Brazil can apply for exemption and therefore go under the radar on this tariff situation, and this might enable the US to then change this into just targeted tariffs against certain countries like China, for example. But certainly Germany would be impacted by this, Canada, Mexico, Brazil, and you would say China not directly but maybe indirectly, but who knows. I mean, China only deliver 1% of Chinese steel. So this is the big news. Let's go back to the charts and we'll see let's just zoom in on what's happened this morning. Firstly, on US stocks. If I bring this chart to a shorter time period, we're kind of flattened off and we stabilized. And this is kind of a situation where let's just see where this goes. Apparently the bill's going to get signed off this week. But in typical Trump fashion, he's just dropped the bomb into the mix. And then he's going to step back and see how this, see what the reactions are. And he's going to probably sign off this bill next week. So let's see. How did other markets behave? Well, from a safe haven point of view, gold certainly enjoyed this. Gold had a negative session. We had some dollar strength in there for a bit. We'll talk about the dollar in a second because the dollar certainly weakened off this. So you had equities down, safe havens up, dollar weakness. So with gold, we smashed back up. We made new highs for the session just by the time we got to the close. So gold benefiting quite strongly from this. Safe haven moves. You have bond markets moving higher. So T-notes generally, well, they'd had a mixed session before the news, but certainly in the end we boosted higher and made new highs for the session off this. So decent risk off with then dollar weakness, because check out the euro dollar. We've been in a great little channel over the space of kind of the latter part of Wednesday throughout Thursday and the first half throughout latter part of Tuesday, the whole of Wednesday, first part of Thursday, but then we kind of broke this off some dollar weakness triggered by some Powell dovishness, and then the big dollar weakness move off the Trump tariff bombshell. And so this took euro dollar a huge distance higher. We were trading around the 122 handle, and in the end topped out at 123 overnight. So dollar weakness here as well. So that's the theme. So let's see how things track. Other stuff then, let's move on, because it's not just about Donald. It's not just about tariffs and the fallout of this. It's also about this lady. So we got an important speech today. I mean, of course, it's been an important week. You know, Brussels and the EU really ramping and ratcheting up the pressure, trying to force the UK into deciding on what they want. That's certainly how the EU see it. They're kind of frustrated in the lack of progress. Just get on and decide how you want to do this. And of course, Theresa May has got a nightmare on her hands, given the disastrous election has meant that she's really got very limited power and is trapped in between the hard Brexit and the soft Brexit camps of the Conservative Party. To the point where, so last night they had large-ditch kind of talks. This is the cabinet, you know, trying to thrash out what is Theresa May going to say today, and a signal of her lack of power. Check this line. This is from Bloomberg. The cabinet agreed to let the Prime Minister edit her own speech before delivery. I mean, talk about having no power over your own cabinet. She had to try, you know, desperate ditch to try and persuade them to allow her to edit her own speech. Anyway, what's the speech going to contain? And this is the problem. It's going to be difficult for her to deliver something that the EU like, because the EU want details. Let's get on with it. And Theresa May can't really deliver that, because otherwise she'll lose her job. Because if she basically decides to go soft Brexit, well then her job's at risk, because the hard Brexiteers will force her out. But what happens if she goes hard Brexit? Well, again, she might lose her job, because the soft Brexiteers might move her out. So it's kind of it's a lose-lose personally for her. And you know what politicians are like. Self-preservation's number one. So this is the 5 things that we expect her to have in her speech today. So she wants to talk about regaining control of laws, borders and money. That's being honouring the UK electorate that voted for Brexit and delivering what they voted for. But then also recognising the referendum was not a vote for a distant relationship with our neighbours. Okay, so that's the kind of theme of it. We want to get back control of laws. We want to deliver Brexit as the UK voted for, but we don't want to step away a million miles and not trade with the EU ever again. But this kind of thing's so vague. This is not what the EU want. There's no detail in this. We'll have to see. Maybe her speech later will carry more detail. The other thing, the agreement must be enduring and not lead to endless future negotiations. Well, I definitely agree with that. I don't think anybody would disagree with that. But of course, that makes this deal right now all the more difficult to actually negotiate and finalise. And obviously, time here, clock is ticking. There's no time. Number 3, it must protect people's jobs and security. Yep, fine. That's fairly obvious. It must be consistent with Britain's remaining modern, open and outward-looking tolerant nation that stands up for its values while meeting international obligations. And then the deal must strengthen our union of nations, that's the UK, and our union of people. So that's obviously a direct riposte to the EU's idea of moving the Irish border out onto the Irish coast and effectively taking Northern Ireland into the EU. Obviously that's never going to happen in a million years. So really, and the EU know that. I think that was just put into their kind of piece just to rile the UK and try and force them down the path of actually making some decisions. What I'm worried about, this speech will be vague. It won't carry the detail the EU want. The EU will continue to be frustrated of a lack of decisive sort of action. And the clock's ticking, because check out the timeline here. We got this EU summit. Look, bottom left of this. EU summit, 22nd and 23rd of March. That's the day or the days where we're hoping to get this transition deal finalised. But it looks like we're a long way off that at this point. But a lot can happen in 3 weeks when you apply pressure to politicians. So that agreement needs to be made, focusing on a transition period. Okay, that needs, so not legally binding until ratification. So that means until basically nothing's signed off until everything's signed off. Then you get this period begin where the trade talks start. I mean, believe it or not, we haven't even started with trade talks, and here we are now just, well, 13 months away from leaving, and yet we haven't even started trade talks yet, and apparently this is going to get done in the space of about 6 months. Good luck. August to October, lessons of 2017 suggest 3 to 4 months of noise, deadlock, possible before deals struck. Yeah, at least 3 to 4 months, I would suggest. And then the idea is that the EU summit on the 18th and 19th of October will see unofficial deadline for withdrawal talks to conclude. So they want a deal done. I love it. They want a trade deal finalized by the end of October. There's just no chance of that, I don't think. Anyway, then they're going to have this time period for ratification, where this has got to get signed off in individual EU parliaments, as if that's going to be a smooth process, and then we'll leave. Or at least the transition period will start end of March, okay? This is the window. What's quite interesting about this graphic, and I really like this angle and something I hadn't thought about, Bank of England window for hiking, well, that'll shut by May. Everyone's currently thinking, will the Bank of England raise rates in May? This is the thought. We've got a pricing in now just over about 50% chance of a rate hike from the Bank of England at their May meeting. Why May? Well, that's their next Super Thursday every quarter. The Bank of England don't just have a meeting, but they have their quarterly inflation report where they update inflation and GDP forecasts. Mark Carney has a press conference and all the rest of it. So it's only every 3 meetings, it's only every once a quarter the Bank of England have this super meeting, and it's really most likely they're only going to be hiking rates at one of these super meetings to enable them to communicate the rate hike better. So that's why we're thinking May. I like this graphic. The Bank of England have to hike in May, because otherwise for the rest of the year it's going to be a nightmare, because Brexit negotiations are going to go ramp up, and perhaps noise and risk and uncertainty and a lack of confidence might increase in the latter part of 2018, not allowing the Bank of England to hike. So this is quite an interesting angle from ING Economics here. The Bank of England, it's one hike or none, and it's got to be in May. So interesting. Right, let's get back to the charts. So Theresa May, or actually no, let's talk about the calendar first and talk timings, then we'll finish on the charts. This morning, we've had some figures out of Germany earlier on the import and export prices. Retail sales were really bad, I have to say. Minus 2% for January. German retail sales, we'd expected plus 0.9%. So negative figures from Germany. We're expecting some Italian GDP data in 5 minutes. This is for quarter 4 of last year, though, so it's old news. This isn't going to have an effect on markets, and indeed you could say that for pretty much all of the data here on this list, unless you're trading Canadian products. Their GDP figure's not going to do much in any way. It's fourth quarter, so old news. Perhaps the one kind of figure out of the US this afternoon that might have an effect would be the sentiment, University of Michigan sentiment figures, but this is the final reading for this. We had a preliminary number for February 10 days ago, so again, this isn't going to have an effect. So actually, from an economic data point of view, I think you can largely forget this calendar. Nothing on there that looks of any interest. So this leaves the two big guns of UK policy to deliver speeches today. We're expecting comments from Carney. We're not too sure on timings of this. Some say 10 o'clock. I've heard news this morning it might be more like 11:30. But then Theresa May's speech most likely to be more important. Again, uncertain on timings of this. I'm going to say to you it's 1:30 p.m. We've got certain members here on the floor, Charlie and Safe, for example, who've got their time zones wrong and are telling me it's 8:30 a.m., which is incorrect, because we've already had 8:30 a.m. and she said nothing. They think they're operating in the US. It's 1:30, unless we tell you otherwise. Theresa May's speech, 1:30 p.m., which really becomes the big focal point for the session. Let's have a look at the charts, and let's start with cable. And let's think about the pound here, because obviously we've had some well, it's been a very interesting week. If we go back and look, 240-minute chart, just looking back over the last few weeks, but certainly, of course, and I add some lines in here, negative week for the pound for absolute sure. And if we look on the daily chart, let me just shift a couple of these lines then. We're trading right on this February low here. Actually, I guess it's not the February low because we broke it on the final day of February, which was Wednesday, of course. But this key low on the 9th of Feb at 137.80 on the futures, we're trading right on it now. We broke it into the close Wednesday. We traded pretty much the whole day below that yesterday, despite some dollar weakness off Trump's tariff bombshell. And right now, today, we're not quite sure what to do. That's the kind of vibe for this market. You're trapped between two pretty big forces now. You're trapped between, obviously, the dollar weakness off this tariff news, but then, of course, hang on, Theresa May speaking, and generally we've had weakness through this week on the pound because of Brexit risk ramping higher. So at the moment, we're kind of in a bit of limbo here. The 138 handle's been key resistance on the upside. So we did move higher last night off dollar weakness, but we didn't get very far. So I would say perhaps difficult to choose here which way we go. It may be that there's uncertainty until we hear more from Theresa May. But I don't know. I can't help thinking that there's going to be, again, a lack of detail and substance in this speech from May later on. And I would say maybe that's more likely to be sterling negative. Don't forget Carney's talking, though. We might get some hawkishness from Carney that you've got to factor in. So it's a tricky one. I'm on the fence here for now. I want to hear from Carney. I want to hear from May before making a judgment. But 138 is important. Before either of those speak, any kind of move to 138, look for some resistance, or if you're uncertain, just see what happens there. If we do break higher above 138, technically that'll be positive. Maybe looking for classic longs off 138. But I'd certainly keep most of your powder dry on cable until we've heard from the big guns, Carney and May. Then I think we'll get our movement and direction. Let's talk about the euro dollar, because technically this is quite interesting. Let me add the line in here, because where we found resistance this morning is around that 123 handle. Let me just move it to 123. We had key support back here on earlier in the week. You know, beautiful kind of bullish technical breakout of the channel yesterday. Of course, fundamentals driving this. Dovish Powell, Trump tariff chat, dollar weakness, propelling this thing back higher, recovering a lot of the losses from earlier in the week. So 123 handles current resistance. Keep your eye on that. We've got the pivot level, which is down at 122.44. Whether we get down there or not. In the meantime, you got this top from yesterday morning. So it's actually, no, sorry, not yesterday. Wednesday's high is at 122.56. So that's a price to be looking out for as well. Okay, so I think I've kind of covered much. Let me just touch on oil briefly, because oil's kind of been taking a back seat here. I mean, from a dollar point of view, oil did manage to rally into the close last night because the dollar weakened, but that rally's not lasted. We've definitely got a bearish kind of vibe here. This week's been very negative for crude. We have had dollar strength in the first part of the week, pushing oil lower. Then we had bearish inventory data from the US, continuing the downside. And it does feel like oil remains in this kind of negative sentiment. And, you know, a failure to really get above Wednesday's low is indicative of that. So even though dollar weakness has come through, oil has not rallied. So I'd say that puts oil firmly in the kind of bearish vibe. And so perhaps should expect a move to have a look at the low from yesterday and a test of the $60 handle perhaps as we go through this afternoon. But I'd say most people aren't looking at crude today. It's more about the currencies. It's more about equities as they continue to digest this tariff bombshell. And then safe havens taking the lead in terms of any kind of risk-off vibe. Right, so I'm going to leave it there, guys. That's your briefing for this morning. Carney and May, they will be the focal point for the session. Good luck. Enjoy the day. Thanks a lot.